Good morning. Welcome to Forex in Four. Today is Monday, September 26th, 2011. This morning, looks like the euro lives to fight another day. And you can see here that we're bouncing a little bit higher on the euro. We're looking at a 30-minute chart, and you can see that we're just back up above this 135 level. And it looks like we're going to be testing a little bit of short-term resistance up here, say around 135.50. All right, and then we also have on the daily pivots a resistance level about 135.75, say. There as the first R1 on the pivot points. Okay, so what's happened with the Eurozone? Well, basically it didn't collapse over the weekend, which is a good thing, right? So that's the first positive we're seeing now. Now we had this meeting of IMF leaders over the weekend. They're talking about what's going on, and actually now there's talk that IMF may need some more money to be able to fund some of these bailouts. But they're still working on this euro debt crisis over there in Europe. They're talking about the expansion of EFSF and how perhaps they can leverage the money that they have without having to bring the ECB into the matter. Now they're saying that some people are saying the fund needs to be expanded. Others are talking about erecting a firewall around Greece so that if they do default, the contagion doesn't spill over to the other countries. And basically we know nothing more than we did say on Friday when the markets were very nervous. But you got to remember, going into a weekend, people are fearful because if something happens over the weekend, there's not a whole heck of a lot you can do. So perhaps it's a little bit of a relief rally happening here. All right, and you can see that Euro's just pushing back up, moving north here. So we do have some risk taking going on this morning. Okay, after the selling of the last few days, I'm just gonna flip it over here to S&P 500. That's a pretty good barometer of risk. Okay, and you can see that we've been bouncing higher here, and we're moving up, and we had been down since last week. Also want to show you gold. Interesting with gold, but gold has been tanking. All right, came down, did a quick spike down just over that 1550 area. Okay, where the S2 pivot support is right at 1548. All right, now we're bouncing higher. There's some talk that people are concerned about liquidity in the market, so that they were trying to raise cash, and they did that by selling gold off. All right, because there's also a concern that if there's a run, say, on the European banks, that there's going to be a liquidity problem. So people, it looks like they've been trying to raise some cash, selling off gold. All right, a lot of people think of gold as a safe haven asset. All right, so if there's a problem with the euro, people think gold should be going higher, but it's actually really more of just an alternative currency, and it has been trading with a inverse correlation to the dollar. All right, we know that when the risk increases, dollar strengthens, therefore gold sells off. All right, you can also see oil pulling back. Okay, oil got back to, looks like we're putting just a little bit of a double bottom here, around 77.50 area. We're bouncing a little bit higher with the risk taking. All right, and you can see that we'll take a quick peek here at the Aussie. All right, Aussie bouncing up as well on some risk taking. Now, just wanted to show you in New Zealand. Okay, the Kiwi, same, looks like the same chart, but we're bounced back on the risk taking here this morning. But they actually had lower than expected trade balance figures came in, so it shows sign that perhaps the economy there may be weakening just a tad. All right, so that's what pushed some of that sell off earlier there in New Zealand. Okay, they were expecting a trade deficit of 321 million. It actually came in closer to twice that at about 640 million. So that's what we've seen there. Now in Europe, we had actually some German IFO sentiment figures, which actually came in better than expected. I'm a little bit surprised by that, but business climate came in 107.5 versus 106.5, current assessment at 117.9 versus 115.7, and expectations of 98 versus 97.3. So these are all better than expected German sentiment figures. So you gotta understand Germany represents, just say about 1/4 of Eurozone GDP in general. All right, we know that they are the leading economy there, but it's not everything. All right, so you got to keep an eye on that. So we had euro moving higher. I just want to take a look at euro Swissy. All right, you can see here we're still sitting up above this 122 area. All right, it hasn't been challenged, the 120 area where they put the target rate and the peg into. So that's interesting, and especially with the risk aversion that's been going on in the markets. I just want to show you pound versus euro. Okay, you can see euro's bouncing back a little bit today, but had sold off versus the pound. The pound's actually gaining a little bit here, and you can see that the move actually started a little bit earlier last week. So sort of like the pound is sort of become an alternative to the euro, if you think about it that way. All right, if euro's anti-dollar, All right, now the pound's a little bit anti-euro, so the pound's not necessarily trading with the dollar, but it's just another place where money can flow to that is more stable than Europe. All right, it has a lot of similar qualities that Europeans, the euro does from a fundamental perspective. So you can see the pound's been moving up a little bit, even though they've got a little bit of declining growth forecasts in the UK. All right, right now it seems like things are still manageable there, and until the Bank of England comes out with some sort of further monetary easing, all right, we may see the pound continue to rise a bit. So this week's kind of a slow week for actual news. I mean, this is like I call it random week, where there's just a bunch of different stuff. We're gonna have new home sales out in the U.S. here a little bit later this morning. We've got consumer confidence figures in the U.S. due out tomorrow. Wednesday's durable goods. Thursday there's GDP estimates and personal consumption figures, and then on Friday we're going to get the Michigan consumer confidence and more personal spending numbers. So there's really not a ton going on here from a growth perspective, and I think right now the markets just are really still focused on what's going on in the Eurozone. All right, they're talking about they've got 6 weeks to save the euro. Okay, there's another meeting coming up in early November that they hopefully would like to have things ironed out by, but maybe not possible at this point, or perhaps they're going to try and get it done earlier, so we'll see. But I just want to show you also dollar CAD. You can see that we put in just a little bit of a new high here, and now we've got dollar selling off a little bit, but we got as high as looks like about 103.75 here on dollar CAD, and they're going to have GDP figures at the end of the week on Friday, so that could come into play. But right now these things are just trading on risk themes. All right, if things start to heat up and we start to see more selling this week, then we could see some further risk aversion, meaning dollar strength. But until right now, I think people are just starting to try and calm down a little bit, just relax, give these guys in the Eurozone a little bit of time to work this thing out. Granted, they don't have much more time available, all right, but if they can stabilize the situation, come up with some credible plans and figure these things out, then it may not be that bad. So we're going to keep an eye on the Eurozone. Also want to keep an eye on dollar, yen. Just want to show you that right here. We're still above that 76 level, which I think if that gets breached at all this week, the talk of Japanese yen intervention is going to pick up. So, that's really what we're looking at. Not a whole heck of a lot on the news front, so just keep an eye on this euro situation and the odds for any increased risk. So, good trading to all.